Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, October 4th, 2023. Wanted to get one out to you early today and just kind of loop over, it's not everything, but a lot of the main asset classes I've been covering lately. That's obviously the equity markets being one asset class, bonds being another asset class, commodities. We'll focus mainly on crude oil. Time permitting, I'll get into some of the ag commodities, but I don't want it to be a super long video. So, crude oil, natural gas. These are questions I get. These are things I'm trading, and let me just dive into it. And I already got one thing out to you this morning on the equity markets, showing you those 60-minute divergences. This is the daily chart of QQQ. We're still, as I said in yesterday's video, you just can't write off. I've been waiting to eliminate. Now, nothing's ever certain in the markets, but I want to eliminate any decent chance of a marginal new high. And until we really punch down through this level here, I've had a red line on 154.70 for a while now. Two red lines. We got that one. Need to take this one out. So, and we're not there, like I've said. So I don't want to, be redundant. Like I said, my views. I did post. I'll get to that in 1 second. Reverse to long. I think we're going to get a little bounce today. I think that's in my active trading account. So, not to be confused with, I wear multiple hats. I have IRAs. I have Coverdale educational savings accounts for my kids. Those are longer term accounts. I don't go in and out 10 times a day in the futures, and those are swing position accounts. So just keep that in mind when I talk about my active trading account. It's easy. It's a couple clicks of the mouse and boom, you're long, short, in, out. And like I said, try to game all the little micro squiggles is what I refer to them as. All right, let me show you. Well, that's it. Okay, so that's it. We're here holding pretty key support right there. Price support on QQQ. When you look at the 60-minute chart, I had this board recently. I pretty much eliminated those two targets when I reversed back here the other day. A couple reasons I went long this morning, including but not limited to those positive divergences on the 60-minute charts. You have also, remember, we're still coming off a solid 60-minute divergent low on the QQQ 60-minute. What I gave you this morning was were the futures, and it's going to be a different chart because those are trading around the clock. And so, there's still the potential for another thrust up. There's still the potential for that marginal new high. I put the odds lower than I did before. Those odds have been reduced. And those odds of a marginal new high will go up substantially, I believe, if and when we make a solid punch down through the recent lows there. At that point, I might even cross it off as my alternative scenario. All right, so that's where we're at. You look at I gave you the 60-minute charts this morning, showing you the positive divergences. This is where we popped this resistance level today. Then at 10 o'clock, you had a flurry of economic reports, ADP, durable goods. I'll have to get to the economic calendar in a second. It's kind of a mixed bag. ISM, I believe, was on there. Manufacturing, those numbers came in above expectations. But the big one to me is employment. That's the last thing to roll in a economic expansion, aka bull market. That's usually the last of the pillars that gave. So I'm watching that one closely. And it was weaker than expected. In fact, I'll get to it in a second. I believe it was the lowest reading since employment dipped negative back in January, right after COVID. We're going back to 2021. Again, let me just get to the chart. The fundamentals, day to day, cumulatively they matter. Ultimately, they do play out in the long run. But if you're trading off news headlines and fundamentals and all that, good luck with that. Warren Buffett, he buys and holds 5-10 years. He's a fundamental investor. You will get clobbered trying to trade actively using fundamentals and trading off headlines and news. By the time you read about something, quite often it's priced in and the opposite of what you think should happen happens. So I'm just kind of speaking to the macro and telling you what's moving things today is really where I was going with that. But And I just added a little bit here. Again, active trading account. This is what I think happens today, but I don't want to see, there's a gap right here. This is a 5-minute chart, guys. If I didn't mention, I jumped over. If I forget to tell you, up here in the left-hand corner of my charts, you can see the time frames I'm on. Sometimes I'm just jumping all over the place. So there's a gap, our gap up today. So you had a breakout here. That was a buy signal. Then we had the economic reports hit. Market sold off on that. But the next objective level for longs to step in is the top of the gap. Then if we get down to the bottom of the gap, anything much below that isn't going to be good, and obviously a break below the recent lows won't be good either. We'll still have, if it happens today, you're still going to have divergence, positive divergence. It's not going to kill the case for a rally. This is that big previous low that I'm really watching here. That was also a divergent low. I think you picked up on it now. A lot more goes into just looking and trying to identify divergences. It's when those divergences are likely to play out. Ideally, you want to line up long entries and short entries and exits on those positions when you close out with breaks of support, resistance, pullbacks to support levels, whether it's a trend line or a horizontal support level. So anyways, I'm throwing a lot out at you, but these are the, this is where I'm leaning towards a little bounce today that will get sold into just as it gets convincing to the masses. I just jumped over now to the SPY 5-minute chart, SPY, S&P 500 tracking ETF. There's a nice clean downtrend line, which seems like a pretty obvious target. Whether we make a marginal new low or not, it'll still be, if it happens soon, it'll still be a divergent low, and maybe check this trend line. So there's one potential target. You have a little bit of price resistance. These are old lines up here. I'm not looking for that. I just haven't updated the levels, but there's a minor resistance level here at about 424.60, which comes in with that trend line. If we can't rally off these 5-minute and 60-minute divergences, like I said in the post this morning, it was not meant to be, well, the market's going to rally, the market's going to go down. No, it was, hey, recognize these divergences. These are what buyers typically step in and buy. These are more of the technical forces, if you will. The divergences are simply showing you that the momentum is waning in a downtrend. That's what the divergences are between price and the momentum indicators. So when price is going down, but your momentum indicators are making higher lows, that is positive divergence. It shows that the selling pressure is waning, and you're likely to get a trend reversal. So they're a big part of active and swing trading. And they work well too in the longer term time frames. All right, so this is kind of okay. So you see where I'm looking at here. And if we pop that, you can see we have a pretty good resistance level up there. So this, to me, if we can hold, whether it's a marginal new low or not today, and then we can go here, break out, that's a likely rally. And what did I think I told you this morning? I'm looking about 3 to maybe 4%. That'd be about 3% there. This would be about 5 if we got up here. There's a big old gap in between. Again, I haven't updated this chart. There's a gap. And so this is all, let's just say, a potential at this point in time, max bounce target for SPY, and then QQQ somewhere along those lines. There's a big old gap. Oh yeah, we were trading off this gap recently right here. Remember this one? And that's where it was long here off this divergent low, shorted, reversed there, posted all those on the home page, which I usually don't, and then went bullish here, gave you additional targets. That was on the 60-minute, but then I changed my mind again, close out, reverse short, grab that whole thing down, and here we are. So long at the moment. Again, active trading account. And, if I decide to close out some of those longer term swing positions, I'll let you know. But like I said, I'm not looking for a home run right now on any kind of rally. Wanted to show you. Oh, let's do it this way. Let me just jump to the comments sections on the latest post today, and I'll just kind of run through these in no particular order because these are the questions you guys have. These are the ones I should update. So any update on UNG? Nat gas finally broke above 305. My reply here, of course, you can go in and read it. UNG continues to trade in the somewhat sloppy and sideways range. And I've highlighted several pullbacks to the bottom of that range, which comes in around 655, including the most recent one, as an objective level to go long with stops somewhat below. Whether it was in the video, most of those highlighted were in these comment sections here when people ask about it. As such, it remains more of a swing trading vehicle for now, meaning when you recognize a trading range, you're long at the bottom of the range and you take profits or short at the top, and or wait for a breakout, position long on a breakout above the top of the range. Now, let me get to that. And so, and it's still holding that big divergent low that it put back on June 1st. So natural gas, in my opinion, still has the potential for a longer term swing or trend trade, that is, when it takes out my T2. Let's jump over to natural gas, get that one out of the way. UNG, you can trade nat gas futures or UNG. This is what the 60-minute chart looks like, but the daily kind of shows a little more clear. All right, let me zoom in here. This is, okay, let me zoom out. Sorry, I'm all over the place. Divergent low, divergent low, divergent low, big divergent low, big, strong, powerful positive divergences, but we haven't gone up much, but we haven't gone down. We've been locked in. This is the trading range. You can see it clearly. We're in it here, and we had two brief but false breakdowns to the bottom. Those were also divergent lows. And again, you can see my divergence lines down below, indicators making higher lows. But here's the trading range. So, and I, from this point, recognize I laid out back off that divergent low. I gave you 3 price targets. We hit the second of which is now pretty much defines the top of my range. That last time we hit the T2 again was over here. This was the first time, and we had negative divergence. I think you can see it there in the video. I know I have to zoom in. Some of you watch this on cell phones. It's going to be hard. I recommend, big monitor if you have it on a PC. But there it is. So that's it. And boom, boom. You can keep buying it. 655 with a stop somewhat below. Allow for little whipsaws. But don't get married to it in case the bottom falls out, because the bigger a range is, the more I see it, and then the more significant a breakout. So in other words, the next, when we finally get a definitive break, anything but a whipsaw above, that fails, it will likely determine the next tradable trend. Nat gas is down near, we're still in an inflationary environment, and we're looking at multi-year lows in natural gas. So I think it's safe to say that the risk reward is, skewed to the upside. Natural gas isn't going away despite Biden's big green plan. And, we've got a crazy election year coming up right now. And you've got a incumbent president that's not even fit to be in office at this point, in my opinion. And even, they're seeing headlines that even the Democratic Party is realizing that. It's kind of insane at his age and his mental condition he's running again. But then, of course, on the other side, you got the whole Trump circus and all that stuff going on. So, and then let's not mention the first time in U.S. history, McCarthy being thrown out as leader. It's Speaker of the House. It's crazy what's going on right now in the political arena. And so if there's ever been the stage for a big drop in the market, I think based on all, and I haven't just now thrown in the whole political sphere. I haven't talked about it much lately. I've been saying keep an eye on all those potential yellow flags. And let me that segues into the next reply I made here. Okay. So this member here said, quoted me saying those bullish and expecting new highs in the market soon could also make a case to go long with a stop below the recent lows, and or if those 60-minute divergences are taken out. So that was referring to this chart here where I said, here we are, positive divergence. If you believe, there's, markets might bounce. Whether you believe it, whether you want to be mechanical and just say, I see a divergent low, I'll take, go long until if and when. Because like I said, the divergences get taken out when if we go down here and these indicators undercut these previous lows, and then you no longer have the 60-minute divergences. But as you can see from these charts I posted today, there are no guarantees, but typically divergent high, you correct. Divergent low, you rally. Divergent high, you correct. There was probably, I didn't even mark it there. That was a divergent low right there. I can see it right here. So that was a divergent low. I missed that one. Rally, divergent high. You got it. All right. But there was one here. Where was it? Right. Maybe it was on ES. Sometimes they don't play out, guys. And then it's very bearish when they don't. But, it's enough to get my attention. And the other thing to that indicates a possible rally, and those were the levels I told you today. And that's where I told you we popped that earlier. Then the 10 o'clock economic reports came out, and that was what I was just showing you on the 5-minute chart. But we pulled back to the gap, which I think will hold and will bounce. And so if they take that out again, if we rally back up and take out today's highs, let me just keep this simple and tell you how my mind works. I know I talk 1,000 miles a minute, and there's a lot of moving parts in this game. So here's how it works. I think this is an objective level to step in and buy. If you think there's going to be a bounce, and you can have a stop right under the gap, you can have a stop under the recent lows, you can maybe give it a bigger stop over the previous low from back here on the 27th. But I think we'll rally up here, and then we pop this. They'll start screaming. You'll see a lot of short covering today. All the JCL shorts, I call them. Another term I made of Johnny come lately. They didn't want to short up here. They started getting bearish yesterday on the big down day. And so what happens is they come in and they buy their SQQQ or whatever, and load up on the VIX and all that when it's rocking. And then they realize, one little up day will start to squeeze them out. They go underwater quickly, especially the retail crowd. They love those leverage ETFs. And then and there's nothing wrong with trading them. They're good active trading vehicles. But just factor in the leverage. Don't look at the dollar signs. If you're right, I'm going to get 3 times what the NASDAQ does on a drop. You're also going to get 3 times the loss on a rally. So if we have a 2-3% snapback rally, you're talking almost double-digit losses on that position, especially if you nailed it at the exact worst time, if you shorted where it was yesterday's low. Okay, let me give you, so that's it. So I think there's a decent chance for a bounce. Oh, all right, back to the post this morning. All right, I'll give you the update on UNG. Maybe I didn't finish that. Let me go back to that. Again, my apologies for looping back and forth to different things. What I've been saying for a long time is we've already checked that T2 level twice. And so we need to punch through that. And once we do, I think that'll open the door to T3. And I will most certainly add targets if we head up there, because this is a powerful trading range. And from that, I expect more than just a little, pop up here, that 890-ish level. So that's it. And again, don't get married to a long, simple stuff. Long at the bottom of the range. You can even, like I said, the top of the range isn't super well defined, so it's a lot easier to just pick along here and, maybe get, whatever it is. It's natural gas, even the low end of the range is still almost a 10% pop on that. Okay, so that's natural gas. Let's get that out of the way. Let me go back to what I posted this morning. Okay, so anywho. So this subscriber says, count me in. I guess they're looking for new highs. And I said, okay, here's my reply. Good luck. And remember to keep an eye on those potential red flags, such as any or all of the big banks, JP Morgan, Citi, look at them collective, and it could be any one of these. The other non-bank financials, that's MasterCard, Visa, Schwab, looking at going down recently. There's a lot there. KRE, i.e. the regional banks. You've been watching California muni bonds. I've highlighted things there that aren't being talked about, cracks that I see. Crude oil, obviously, this economy, as resilient as it's been, cannot continue to tolerate, oil prices going up the rate of ascent that they've been, pushing, 90 plus and heading towards $100 oil. Yep, it's going down today. I told you also that was also an indirect, being short crude, I think, is an indirect hedge to index shorts, because if crude prices, as they are today, down and the market was up, the crude prices continue to fall, you should see some type of abatement. Maybe the stock market will rally on that. However, and of course, treasury yields. So it's a lot here, guys. And it's not that hard. Create a watch list. I call mine TTW, things to watch. I've gone over dozens of times in the last few months. And what I went on to say is, the more of those that reverse and start to rally, In other words, if treasury bonds start to rally, that means yields are falling. That's the most important. That would be bullish. If crude oil starts to go down, that reverses and starts to drop. JP Morgan holds support or gets back above support levels. And the more of that happens, the better chance you're going to have a rally. But it goes the other way. And then I went on to say that, oh yeah, and we still have, divergences, even on the daily chart on Apple, 60-minute divergences. But here's the important thing. However, it could take just one of those things to watch, securities blowing up, that has repercussions that spread throughout the financial markets. One of a million examples. Again, I just named some, but not all of them. Schwab. Watch Schwab. It's not been doing well. They're about to close the merger with TD Ameritrade, or convert all the accounts. The merger's been finalized, I believe. But it's, Schwab is also one of those, what they call non-bank financials. It basically acts as a bank. It has a lot of deposits. When the regional banks are taken on the chin, so was Schwab. And a failure of a major brokerage. Remember, it's not just Charles Schwab anymore. They just absorbed TD Ameritrade. That's a lot of accounts, a lot of people's money. A lot of people will be spooked if there's problems. So again, any one of those could take down the entire market, because that's how things work. Everything is interrelated. One broker fails, then it triggers other brokers or related firms could then fail as well. So hopefully that makes sense. Just keep an eye on all this stuff. Just, create a watch list, watch those things. And again, it's both good and bad. All the, everything starts to, all those things to watch are doing okay and they're starting to abate. Hey, could set the stage for an even bigger rally. And then, so that's where I mentioned I went long, and also gave you, oh, here it is. I gave targets in here. Okay, so this is my NQ. It's the same chart I got out to you this morning, but I just wanted to clarify. This would be right now, current means as of right now, max bounce target. So these are all the targets, arrow breaks to note levels you're likely to get a reaction. That one should be a little bit lower. That we'll call it 15,000 right there. And so if we can hold the lows today and start to rally. And I think, again, at this point, all we have to do right now is I'm doing this video, and I'll try to wrap it up so I can get out to you in case it happens, is just pop today's high. That'll bring in, I think that'll bring in the short covering and bring in some buyers and say, okay, we're not about to fall off the cliff, at least not just yet. Okay, all right, enough on the equity markets, but it's a big one. And let me cover crude oil. Let's use USO. Crude oil has been a short now for a while. First shorted it here. And I did an update right here. Said, look, we've got a little trend line. I could see the possibility if they pop that, we'll probably run up to a marginal new high. But I believe it'll only be that, a divergent, because it'll still be. That's why I try to anticipate not just what's happening. I think that kind of separates me from a lot of folks. I kind of look ahead and draw out the whole scenarios. Okay, if A equals B, then B equals C, or if A happens and B happens, that was it. So we popped it. We did get a marginal new high, but it was one where a lot of short sellers would cover and longs would go in and buy, because longs like to buy new highs, because breakouts to new highs, or at least near-term highs, are bullish. But, I foresaw something different, and so it was a level to either add to shorts, especially once you saw the reversal come in, that confirmed the divergence. So here we are, boom, T1 hit, and we took out T1. So that opens the door now for a move down to T2. This is should be, remember, every little pullback in crude and an uptrend is market's not going to react on. But now at this point, as right now as I'm talking, over the last 5 days, we've now dropped 8%. So that is another one of those TTW things to watch. That should be, it is net bullish. It's showing an abatement in inflationary forces, the biggest inflationary force, crude oil, energy prices, which again go down to everything, everything just about, and a lot of things manufactured, a lot of things delivered, whether it's going across the Pacific on a tanker or a big a ship, or it's being manufactured or driven by rail, truck. You get the point. The crude oil permeates into almost every aspect of any product being created. manufactured and delivered to your doorstep from Amazon. Okay, that segues into the next one. IEF is a 10-year bond. 10-year bond moves inversely to the yields. So we have a little bit, not much, but so far a rally today. You can see it's, again, not much, but we're up today and we're still positive for the day. At least we're not melting down anymore. So if this continues up, that should be a net positive for the equity markets. And another case for the rally. What else do I have for you? Oh yeah, the metals. Let's do the metals. So we talked about we had the silver, gold, silver. Somebody asked me about this yesterday. I got to make sure I answered the question directly. They were in silver, and I think they asked about how to manage stops and this is one reason I like to trade futures. I mentioned. Let me find that for you. Okay, here it was. Somebody asked, gold, silver blew right through my stops. I'm stuck. I'll cut this loss at the moment, or I don't think this is a cut losses moment, or think it'll retest trend. So I'm going to get to the charts on that in a second. But then this question here, and I like to pass along these trading tips, things I've learned over the years that help me. So how do you build a stop loss order on IBTX? Oh, I didn't get another reply. I assume that's maybe there's more under here. Anyway, so silver and gold this is yesterday, are just a hair above solid support on the daily chart. I'm going to get to that in 1 second. So my guess is the downside here is limited before a decent snapback / oversold rally. So that's my takeaway on gold and silver. I asked, what is IBTX? Is that Interactive Brokers Trader Workstation, which is their trading platform? If so, when trading GC or SI, which are gold or silver futures, those are my preferred trading proxies for it, for a couple reasons, or really any futures contract for that matter. I have a global setting checked for future orders that says allow orders to be activated, triggered, or filled outside of regular trading hours if available. That's an option on their trading platform. And so that way, if there's a huge rip or dip in the overnight, which it was, the order will either close out at my price target. If my price target's hit, that's a limit order. And then I wake up and boom, great. I got to my price target. And then I can't tell you how many times my price targets are hit in the either pre-market or after-hour session or overnight on things like the futures, gold, silver, crude oil, natural gas, only to see it, let's say it's 7:30 in the morning, 8:30 in the morning. And then UNG, what happens is the futures hit that level. That's where the pros are trading. Pros are usually in the futures. Then the reversal comes. So if you're in gold or silver or natural UNG instead of NG, natural gas futures, you missed the turn. And it's very hard to maneuver. Even if you're up and awake at that time in the morning, you can only trade using limit orders. It's almost impossible to effectively move outside the regular trading session with ETFs and ETNs. And then, of course, there's a huge tax benefits if you're a professional trader and most of your profits come from trading securities like me, your income, 60-40, that's huge tax benefits to futures. Alrighty, so that will that helps prevent this. What happened here? It is on silver. Okay, so when I threw out silver last time, I've been highlighting this level, divergent lows, divergent lows. Last long entry was here. We started a rally. That was that unusual reversal right there. I mean, we did hit, and the futures also hit, right there, hit a price target. So it worked. It was a profitable trade. But if you were holding out for more, the reversal came. And then, again, an ideal stop would have been a little bit below there to allow an undercut. And that's what happened. But then look at this. That was a huge, massive gap. What you don't see is the futures were trading. The futures don't gap down. They're trading around the clock. So had you had a comparable stop on SI, silver futures, you would have been stopped out, not woken up to a gap of, gosh, that gap was 3%, and it bypassed a stop. And the way stop loss orders work, if you have a good to cancel stop loss order on silver at, say, 2010 or whatever that is there, stop loss orders are immediately converted into a market order if the stop price is hit or exceeded. And so what happens is everyone who had a stop right here was filled here. And you can say, well, I don't use stop loss orders, Randy, for that reason. You can gap down and then you get a horrible fill well below where you plan to stop out and your losses exceeded. So I use stop limit orders. Well, guess what? They're even worse in my opinion, because a stop limit order says sell me out if silver drops to 2010, but only 2010 or better, no worse. That's what a stop limit is. And then what happens is when you gap down below that order, it stays open. They will not fill that order unless it goes back up now. The stop part has been triggered, but not the limit part. Limit says 2010 or better. So unless it goes back up, and if it does, that's where you fill. However, the losses on a person with a stop limit order, that order is still open and unfilled, and their losses have been building since. So, all right, that's just kind of a crash course on stock. I talk about this from time to time. I think it's a very important aspect of trading. You need to understand the differences in those type of orders. All right, now where are we at? So we all know what happened. Again, to me, this was a red flag. It was an unusual drop. It wasn't commensurate with the move in the euro. To me, it appeared that there's a decent chance it may have been a fund blowing up somewhere, a big hedge fund faced with massive withdrawals or having a trade go bad and having to liquidate what they had a lot of, and that might have been silver and gold. But either way, it's a good support. This level here, I have a 1911. I've had this level. I created that back in September of 2022, over a year ago. It was very good support, and it still is in my opinion. And I like silver right here for very minimum an oversold bounce. It's just been really good, well-defined level. And then not only silver's always going to follow its big brother gold, and its big brother is also at a level again that I've had that level. I created that back in 2020, that line right there. It's just been this is my busy board. Please forgive me, a lot of levels, but look, and I even had these arrows drawn highlighting that level of support back there in over a year ago, 2022. Support. Once it was broken, big move down, that helps validate it. The impulsive drop, once it was broken, perfect rejection. Then we tested it, finally broke out, and we had a big rally. Then we back test successfully. On a scale 1 to 10, that's damn near a 10. That's got to be a solid 8 for support. And so we're there. So I like gold and silver right here. I think the downside's minimum. I wouldn't fall in love. There's not really any buy signals. You don't have divergence, but you do have an extreme oversold reading. And so I think the bargain hunters are going to step in here soon. Again, the RR, the risk reward, it's the upside, at least for a bounce trade. I can't make a screaming case, for buy and hold. But to where? Well, these are old lines, but same thing on the way up. There's a gap right there to deal with. Then 174.74, that would be my max bounce target right here. All right, so that brings you up to date on gold, silver, crude oil. Obviously, GDX will follow gold and silver. Wheat just can't get out of its own way. The chart still looks good. I want to wrap it up here because I think we just broke out of that previous high on QQQ, which is another buy signal. And if I keep talking, this market could walk away. So at the moment, like I said, I'm long on my active trading account. I am not married to it at all, but I'm going to just trail this up. Once I get a little more profitable, I'm going to raise stops so I don't, very least, we get up there. I already gave you my bounce targets. At least I'll be looking for no worse than a break even, and then we'll see what happens. It's going to take more than that 3-4% bounce to shake me out of my swing shorts. So again, I want to make clear, longer term accounts, I'm willing to ride out this bounce. Active trading account, came into the day short, reverse long. I'm long at the moment, but by the time the ink dries on this video, meaning that it's uploaded to YouTube and published, I could be short again. So don't, this is not a follow me site. I'm giving you levels to watch, developments to watch, including but not limited to these, intraday charts of QQQ, SPY, look at Apple, Amazon, Tesla, watch everything, and then those things to watch. You start seeing some cracks in the bond, junk bonds, muni bonds, treasury bonds, something, or any of the financials. Really, I think that's an area I'm really hyper focused on right now. I think that's a good chance that if the next big shoe to drop it's probably going to come from the financial sector. All right, guys, let me get it out to you. This has been Randy Finney with the right side of the chart. If anything big changes, I will get my thoughts out to you. And all right, have a good trading day.